One of the biggest misconceptions in people that I talk to that are close to retirement is about bonds. A lot of people believe bonds inherently have no risk, and that's not the case. Bonds are safer than money in the market for sure. So they are safer from that degree. I don't know if you remember 2022 when the returns of both stocks and bonds were correlated, right? Both of them tanked. And a lot of people were calling me asking me, how am I losing money in my bonds? The biggest risk with bonds, especially outstanding bonds, so bonds that are already issued, is interest rates. So I want you to think about it this way. Think about a seesaw at the park when you were a kid, right? And on this side, we've got our outstanding bonds. On this side, we have our current interest rate. As that interest rate rises rapidly, like it did in 2022, the value of your outstanding bonds are going to drop. The inverse is also true. So the value of your outstanding bonds on this side and the interest rates on here, if the interest rates drop, the value of your outstanding bonds will rise. The simple math to that equation is if you're a lender and current interest rates are 4%, and so you lend out a bond for 4%, and then the interest rates crash, right? They go down to 2%. You as the bondholder now have that bond paying 4% is a premium compared to the new bonds issued at 2%. And the inverse is also true. So if you have an outstanding bond paying 3% and interest rates quickly rise to 5, 6, 7%, nobody on the free market's going to buy your bond, but they can get a brand new one at a much better rate. So that's kind of where you can see some of that bond risk come into play. And again, in 2022, we really got hammered in that sphere.